Should you be investing or trading? Or doing both at the same time? Totally feasible, possible. That's what I do, both investing and trading. To answer that question correctly, we're going to have to first look at the definitions of investing and of trading. Hi, this is Ron Verostek. Financially Intact is the channel, and our job is to help you keep your money in your pockets. So here we go, the difference between investing and trading, and which one should you be doing, or both. So when it comes to defining financial terms, I really like the site Investopedia. I think they give some of the most precise answers that you can trust and believe in. So let's look at investing versus trading. Investing, according to Investopedia, is the act of allocating resources, usually money, with the expectation of generating an income or profit. You can invest endeavors such as using money to start a business, or in assets such as purchasing real estate in hopes of reselling it later at a higher price. Of course, other assets that you can purchase would be stocks, bonds, ETFs, mutual funds, and things such as that. Now, for trading, this becomes a little bit different. The definition of trading: stock traders are people who trade equity securities. Their primary goal is to purchase and sell shares in different companies and to try to profit off short-term gains from stock price fluctuations for themselves or for their clients. So investing basically is you're putting your money away, investing it in hopes of getting dividends, interest, long-term appreciation from the growth of a company. Whereas trading is much shorter term, and it's trying to profit from price fluctuations instead. So since it says short term, what's the definition of short term? So I decided to look at that, and that says short-term trading refers to those trading strategies in the stock market or futures market in which the time duration between entry and exit is within a range of a few days to a few weeks. So how I look at it basically is anything under 3 months I would consider trading. There are all kinds of trading. If we go back to trading here for a minute, you're going to see they actually listed it here. The different types of traders are day traders. That means they will be in and out of their positions on a daily basis, sometimes many times a day. A swing trader, it's normally looking at more like a few days at a time. As long as the stock's moving in one direction or the other, they will stick with it, but as soon as it starts to change directions, they are out of that stock. So that's a swing trader, and it could be anywhere from a couple of days to a couple of weeks. Buy and hold trader really isn't a trader. A buy and hold trader is more of an investment person, but sometimes there are stocks that don't pay dividends or interest, and so then you really are just working on the appreciation, and once again they will do it on a much longer term basis. I'm going to show you some of this on one of the charting programs that I use here in just a minute. A momentum trader, that's a little bit different again. So long as the momentum is there, such as GameStop or AMC here within the last week or two, they were moving very quickly, but over a matter of a few days. And so long as there's a lot of momentum, a lot of volume, and a lot of movement, that's called a momentum trader. Then there's a couple others. But you get the gist here is basically investors are in for the longer term, and long term could be anywhere from 3 months to several years, and traders are in for just a short period of time, anywhere from a few minutes to a few hours to a few days, but mostly everything under 3 months is trading in my book, and everything over 3 months is investing. So there you have the basic differences. So now how do you know, and which one should you do? Well, it depends. if you want to be very active in the market and you want to make more money and you want to take the time to learn it and the time to babysit it and pay attention to it, then you should probably be doing at least some trading. But also, everybody needs to be doing investing. Investing is more for the long term, where you're going to be buying those stocks that pay dividends or bonds that pay interest, and you're going to let it sit there for a while and let it do its job. That's investing, and we all have to do that with part of our money. Investing could be putting money in a CD, for that matter, with absolutely no risk. Investing doesn't have to be in the stock market, but investing in the stock market means you are going to hold on to those positions for a while, for longer than 3 months, usually a few years. So then, like I said, on the other hand, like me, myself, I have the vast majority of my money invested, but I also set aside a certain amount where I do trading. And so I'm going to show you now how I find the stocks that I either want to invest or trade in. So let's go and look at those charts and the charting software. So this is a picture off my laptop of the charting software that I use, which is called TC2000. I will put a link down in the comments below so that you can go look at this software if you want. But you don't have to use it, obviously. There's lots of places to get charting software for free. You can get it on Yahoo Finance, you can get it on StockCharts.com, and lots of them will let you draw in some of the same lines that you're going to see that I have here and that we're going to talk about. This is a picture basically of last year in the S&P 500. This is the tracking stock called the SPY. And like I said, it's the tracking stock for the S&P 500. As you can see, here in March is when everything just tanked because of the pandemic. And then we had that big V-shaped recovery, and it's been going up pretty much nonstop ever since. We did have the 2 dips in here in October and November, and now it looks like we're starting another dip. But anyway, we're going to talk mostly today about investing as compared to trading. I'll do another one of these videos here in short order and show you a little bit how I find the stocks that I want to trade in. And I want to mention here real quickly, I am not telling any of you to buy or sell into the market, out of the market, any particular stock or ETF. I am merely showing you how I find the things that I want to invest in and the rules that I kind of follow. If you're going to make money in the market, you definitely have to set up rules, and you have to find systems that are going to work for you. And part of what I mean there is the time commitment. So if you're investing, you get in and you watch it, once a week, once a month, something like that, and just kind of stick with it, but let it do its job. If you're trading, of course, you're going to have to be a lot more active and watch it a whole lot closer, either hourly, daily, something, depending on what kind of trading you're doing. So anyway, as you can see, I'm going to make this a little bit bigger so it's easier to see these lines. This is the big blue line right here. That's the 200-day moving average. So what I have on here, I'm going to make this big again. As you can see, there's a white line, a red line, a yellow line, and a blue line. Now these are just things that I've put in there, and a lot of the tracking softwares or charting softwares will allow you to do this. So the white line is a 5-unit moving average. So right now I'm on a daily chart, and this is part of why I like the software. Is I can do daily, I can do hourly, I can do 15 minutes, I can do 1 minute. I can look at charts however I want to look at them, and that's why I like this software, and it's worth the price to me. So anyway, the white line is 5 units, the red line is 10 units, the yellow line is 25, and the blue is 200. So like I said, since this is a daily chart, the white line is the 5, it's measuring the average of the last 5 units, the last 5 days. 10 is the red. And so one of the things I watch, whether I'm in or out of a market position, for investing purposes, it's that blue line I'm mostly watching. If we're over the blue line, that means we're good to go, usually for several months, sometimes for a couple of years at a time before it ever comes back down and goes below it again. So that's the 200-day moving average, and that's the one I watch the closest when it comes to investing. Now, for a swing trader who's doing it, the longer you want to go, the longer you want your average to be. The shorter you're going to go, the shorter your average. So 25-day moving average, that's pretty strong also. A lot of people use the 50. You'll see that on a lot of the charting websites. So the 25 or the 50, usually you're okay. So in that case, it gets you in markets faster, but it will also get you out of the markets faster. So as you can see, after the big dip in March, the market crossed through the 25-day moving average, that yellow one, way before it crossed through the 200-day moving average. Now, what a lot of people will do is sometimes they'll use a longer one for getting in and a shorter one for getting out of the market, if they're going to get in and out of the market. Now, also remember, I mean, one of the things I preach is we should have money in the market, and the only bad part about the market is if you ever have to sell when the market is down. We never want to get forced into that. But the market comes back. It always has, therefore it probably always will. We can't say that for certain, but it'll probably always come back. So if you have some money in the market and some money in a safe place, and you have to take money out and the market is down, well, you take the money out of the safe place. When the market is up, you got to take money out, you take it out of the market. And that way you never get forced into selling. So, you know, for a lot of people, maybe even most people, once they're in, they should probably just stay in. For those who want to manage their risk a little bit more and not participate in the big dips, such as this one here. You know, if we go back to where this happened in March, you know, you get out here and you get back in at about the same level. You know, a couple of months have passed by, but that was a quick one. That was highly unusual. It's more usual to have extended ones. I can't do it here. Let me go to a weekly chart. Here is 2007 through 2009. As you can see, the high we hit in 2008 never came around again all the way to 2014 before we hit the high. And even in this amount of time right in here from where, now this is weekly, this is 200 weeks instead of 200 days. So the 200 day we would have gotten out right about here, and we would have gotten back in about here. So as you can see, there'd be quite a bit of a difference there. So like I said, it depends on your risk tolerance, on how long you're going to be in the market, and how safe you want to be. Like I said, this is the charting software that I use. It's called TC2000. I'm going to put the link in down below, and then you have to decide, you know, what you want to do. Now, the neat thing about software like this is I get to write my own formulas, so I can get it to scan different formulas for myself. So if I want to tell it, I want to know as soon as I want to know all the stocks or all the ETFs that just crossed over the 25-day moving average or just crossed over the 200-day moving average, I can write the formula, and then when I run the scan on a daily basis, it will tell me exactly who did exactly that yesterday or today or whatever day I tell it that I'm looking for. So this is why I like some of the softwares where we get to set the parameters of it. So there you have it, the difference between investing and how to know when to be invested and how to know when you might not want to be invested and just step away from it for a while and just accept, you know, a little bit of interest instead. So there you have it. That's the SPY, and it's definitely above the 200-day moving average at the moment. So at the moment, you know, it's fine to still be fully invested in there. Hopefully that answers your questions, gives you a little bit of information about investing versus trading. And like I said, the next video we'll do, I'll actually go through this software quite a bit more and show you a couple of the formulas and how it goes and searches for the stocks that I am actually looking for, because they are doing providing a certain pattern that I like and want for my trading purposes. Talk to you again real soon. Bye.